Millions of Americans are experiencing financial hardship right now. And if you are not able to pay your mortgage, please do not let your home go into foreclosure. There is an alternative called a short sale that is going to have financial implications that are huge for you moving forward. I'm going to explain exactly what a short sale is and some of the pros and cons and the reason why you would rather do a short sale versus a foreclosure. Trust me, it's going to have big financial implications for you. Hi, my name is Felipe Crook with EXP Realty. I've been a real estate agent for over 20 years, and I actually started my real estate career in Las Vegas. So I got to see the crazy boom and the foreclosure crisis. Now, during that time period, my real estate partner and I started offering short sale services to homeowners who are not able to pay their mortgage. From 2009 to 2013, we did over 43 short sales and helped homeowners get out from under their mortgage. Now, in that process, we got to see a lot of things. And here are some of the benefits of a short sale. But before I go into that, I want to explain exactly what a short sale is. A short sale is a transaction in which a lender or lenders agree to accept less than what the mortgage amount is owed by the homeowner. In some cases, the difference is forgiven by the lender, and in other cases, the homeowners must make arrangements with the lender to settle the remaining debt. Let's say that you owe $500,000 on a property and it's worth now $400,000, and you decide to sell the property because you're not able to make any mortgage payments. We will negotiate with the bank and the lender who owns your mortgage to see if they will take less than what they ask for. So let's say it's worth $400,000 and you owe $500,000. We're going to ask the lender to accept a loss of $100,000 on that property. That's basically the gist of a short sale. But let me explain some of the myths that you hear about short sales all the time. Myth number one is that banks would rather foreclose on a home than complete a short sale. Let me tell you, in my experience, banks do not want to own houses. They don't want to have that on their books. It is extremely expensive for a bank to go through the foreclosure process. Tens of thousands of dollars in attorney fees. They have to fix up the property. Now they have to sell the property. The banks don't want that. They just want the money that they originally had for the mortgage. They would rather not have ownership of a home. So most banks are willing to do a short sale. Number two, you must be behind on your mortgage in order to complete a short sale. Now, in my experience, most of the people that we helped do a short sale with, they were already behind in their mortgage, or they were going to be behind in their mortgage very shortly. There's only been a few handful of short sales that I've personally worked on where the homeowner was current on their property. Most of the times, if you can make your payment on the mortgage, the bank is going to keep wanting you to make that payment. There have been some circumstances where the seller is current, but they had a hardship. Now, some of the hardships that you're going to talk about that are legitimate hardships are loss of job, loss of life, or death in the family, or a divorce, or a ending of a marriage, or some kind of a medical issue. Those tend to be legitimate hardships that most lenders will consider a hardship that is worthy of a short sale. Some are not as legitimate of a hardship, so you might have to plead your case a little bit more, but those generally are accepted hardships. Now, having said that, in my experience, most of the short sales that were successful, the seller was already not paying their mortgage. I cannot tell you to not pay your mortgage. It's against my fiduciary. You should always try to pay your loans back if you can. And if you can't, then we need to negotiate with the lender. Number three, there is not enough time to negotiate a short sale. Let me go into the foreclosure process really quick so you understand the timelines. In a foreclosure, they can send you a notice of default 90 days after you stop making your payments. Once you get a notice of default, you can't miss it. They will plaster something on your door. They'll put it in the newspaper. They will send you letters. They will make you phone calls, emails. They will try to get you to make your payment any way possible. You will know that if you are in a notice of default. Once you get that notice of default, you have 90 days where they can set the auction date. At the 90th day, they can say, okay, in 21 days, we're going to sell your house at auction. In a short sale process, if you are behind on your mortgage or you're going to be behind on your mortgage, time is of the essence. You want to make sure that you're communicating with your lender as soon as you can in order to avoid a foreclosure. We have had instances where the auction date was set and we were able to push that auction date out or remove that auction, the house from the auction date in order to negotiate the short sale. Some lenders, it was just too late for them. And they were like, look, we're already at this point. We're going to sell the house. So anytime that you are struggling financially, if you're not able to make your mortgage payments, the sooner the better to talk to an attorney, talk to a real estate agent about negotiating a short sale with the bank. Number 4, short sales are impossible and never get approved. Well, I can tell you from personal experience that we have gotten approvals on short sales before, and we can do it again. Some lenders are a real pain in the ass to work with, and some are a lot easier to work with. So it really is a luck of the draw of who holds your mortgage and how easy they are to work with. But we've worked with all different types of lenders and we can get an approval. Some loans are held by investors who are very, very adamant that they're going to get their full amount, and they're really difficult to negotiate with. So there are some that are just impossible to work with, but in my experience, most of them are willing to make some kind of negotiation. Number 5, banks don't like doing short sales. I tell you what, banks would rather do a short sale than a foreclosure. They do not want to have that asset of the home on their books. They would rather do a short sale. So I would say try it. It is not always the case that banks don't want to do short sales. And number 6, that you have to be an owner occupant in order to qualify for a short sale. There are instances where we have negotiated a short sale for an investor before. Now, the lenders are a lot tougher on investors than owner-occupied borrowers. They think, well, you've had the money to buy an investment property. Well, we're going to get all the money out of you. So it's a lot more stringent in terms of their requirements for investors versus owner occupants. But you can do a short sale if you all have an investment property instead of a primary residence. All right, let's switch gears and talk about some of the benefits of doing a short sale versus foreclosure. And the last one is probably the most impactful on your finances moving forward. So make sure you pay attention to that one, because that is the real reason why you'd rather do a short sale versus a foreclosure. So number 1 is that you avoid a foreclosure. Avoiding foreclosure is a good thing. You have more control over the timelines. Number 2, the credit impact. Short sales have a smaller impact on your credit. It will significantly impact it still, but less so than a foreclosure. Number 3, and this is an important one, is the control over the sale. When you are selling your home as the homeowner, you have a little bit more say of who buys it, your time frame, when you can put it on the market. Versus a foreclosure, you are told when things are going to sell, when things are going to happen, and then you have to get evicted from a property by a constable in a foreclosure. Whereas you have some time to plan, you can negotiate with the bank on timelines with a short sale. Number 4, there's a reduced financial strain. Typically, owners can stay in the property for a lot longer than a foreclosure, where you can, recoup some of that money that you would be spending on your mortgage if you're not paying it. So there is some financial benefit that way. Doing a short sale can also be less stressful than a foreclosure. You never know what the process is going to be like in a foreclosure, if they're going to actually sell at auction. Did they sell my house? Am I going to get evicted? With a short sale, you have a lot more control over that process. So it in turn will make you less stressed. Number 6, you have a faster recovery from a short sale. In 2009, I actually short sold my primary residence, and within 2 years, my credit jumped back up into the 700s. It was a really, really difficult emotional decision for me, but I'm so glad that I did it, because I would still be underwater 10 years later had I kept that property. So for me, it was a business decision. Once I got over the emotional aspect of not paying my mortgage and going through the short sale, I was glad that I made that financial decision. And number 7 is the most impactful and consequential benefit of doing a short sale versus a foreclosure. Let's say that you have a balance of $100,000 that you owe. On a short sale, you can ask the lender for a deficiency judgment waiver, meaning that they will never come back for you for that $100,000. In a foreclosure, you don't get to negotiate that. They could still come back for you for that $100,000 balance that you owe them. And that right there is the best reason why you should do a short sale versus a foreclosure, because the financial impact of owing another $100,000 even after your foreclosure is a huge, huge impact on your life and your finances. So if you can negotiate that deficiency waiver in a short sale, do it. Obviously, when you get that letter, you want to talk to an attorney and make sure that it is legally bound. But that is the best way to go. And the best strategy, if you can't pay your mortgage right now, is going through a short sale because of that deficiency waiver judgment. Okay, and we can't talk about the pros without talking about the cons of a short sale. Now, one of the big ones is the deficiency judgment. Now, I just went over the benefit of going through a deficiency judgment with a short sale and them waiving it. But not every lender is willing to waive the deficiency judgment. So that could be one instance where you're going to get a deficiency judgment with a short sale or a foreclosure. The second one is your tax implications. Because you were forgiven a certain amount of debt, you're going to have to pay taxes on that. So regardless of whether you do a short sale or a foreclosure, you're still going to get forgiven some of that debt, which means that you're going to have tax implications. And number three, it can be very time consuming. The fastest short sale that I ever saw was 2 months. The longest one that I ever saw was 16 months. So if you are a person that wants a really stable timeline, I'm not sure a foreclosure or a short sale is going to be really beneficial for you. But if you're willing to be flexible and just kind of go with the flow of their timelines, you will have benefits of negotiating with the bank for that deficiency judgment. That is the biggest benefit, again. But there are some cons. If you are experiencing financial hardship and are not able to pay your mortgage, don't put your head in the sand. Reach out to me. Everything is 100% confidential. And then you want to make sure that you also speak to an attorney once you get to the point of a deficiency judgment, and make sure you talk to a tax accountant who will give you the tax implications of doing a short sale. This is a lot of information. If you'd like to contact me directly, my phone number is 213-268-6832. Again, my name is Felipe Crook from EXP Realty, investing in your dreams.